All right, it's just after 11 o'clock on Tuesday, the 20th of November. A reminder from eminingwizard.com and marketwizards.com. Trading is risky. Use capital you can afford to lose if you're playing this game. We've suggested already that we thought maybe we could take out the highs, that this was a slingshot trade and starting to play whack-a-mole, and suggested that traders make sure they're paid coming into the 68s. Just an educated guess, no more. We're starting, and that doesn't mean the high is in, because we think we're starting to run into some resistance. However, right, the 71 and a quarter was that previous week's low. We've got a 73 and a quarter as a 60 back, and we've got a half gap target at 75s. So the real key right now is this third time through trade. Can the boys keep it above this level to keep a squeeze going? So we're looking at the RTH chart right now to show the range that we've had since the 9:30 open. And this is where things start to get dicey for traders regarding risk and reward. But we do know that as long as the penetration backwards does not really come back past these 59s and 60 areas in here, then traders can be squeezed. So this is an important profit-taking idea right now from anybody who had a great long side trade. And then how much of a bleed back do we get will be the next clue. And you never want to get to that point where you start to give back 10 points to make one or two more. And just like we said down here, one tick missing from our target. Don't be ridiculous. Make sure you paid 34s to 32s. And that's just how fast the market can change gear. Now, these are angels and demons. Typically, I like to see this middle respected first time back. Here's your angel. Pretty good size angel that already tells you, okay, maybe that's it. Sometimes you'll get a little bit of a push above it. You'll come back, test it, and then off. This one just took off. Boom. Okay, and back here, obviously, is our demon, that colored bar right there. And then angels, 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 fallen angels, fallen angels. Every one of these colored bars, these teal colored bars, are angels that got beat. A reminder, gap back in the 96 area, 96 and a half. We are back into range type trading for now. I said we'll probably get a 2-way day today because of the length of the swing in a 2-day range. And that's what we've got, because it's obvious the boys have decided to defend. There's two rationales. Either the boys are defending, which I do believe, or shorts are taking some profits. I also believe that to be true. So bumping into the 68 area, 67 area, make sure you are paid. We do have a retest higher, which I would expect to get done today, and that would be 71 and a quarter retest, 73 and a quarter to 60 back, and a 75. But we may need some rotation south side before we hit those. It may not ever hit them, but that would be what a long is thinking right now. Get to that half gap step by step. So theoretically, the primary trade we can now say so far, meaning the largest swing size during RTH, is actually the long trade, not the short trade, correct? Right? Because we took out that earlier high. So this is the primary trade. Turns out that an educated guess did very well for the primary trade. And of course, we still have some time before noontime. If we took out the low, then that would be incorrect. But for now, that's the primary trade has been a bounce trade. The 10-minute RTH chart. We're using that yesterday because it was working. And we've had a pretty good size bounce off the floor. This is a program trade. You can see it. Every bar here has been white so far. 10-minute chart. Want to go back and see a 5, which is our base chart. That's our 5. And we can see currently this is our fighting zone, the green line to the blue line. We get back under the green line again, and it's still off to the races south side. But I would expect that if we probably need some time to consolidate this. This is a pretty hefty 2-day swing. And I still think we'll get one more short today. But currently, this is a drive to knock out the position shorts as well as some profit taking. And we can see that we're back into a 456 trade already. Here was at 58. We said, let's make that the pivot, right? Because potentially we could come back and do a 50 back, 60 back, whatever. So we know that we're running into the day's middle, and then obviously the 73 target that we talked about, that would be a 60 back. So I think this next range in here to 68 to 73, obviously 75 and a quarter. This is going to be the next resistance, which may prove to be fairly stiff right now. So that's why we're saying make sure you are paid coming into this just ahead of that. And we may need to bleed back some before we can do any more running that way. So I think we've neutralized the day a bit, but we're still going to be looking at, obviously, longs taking profits. So that should cause some bleed back. The question is how much. And we can see that we're starting to make a higher high. So my assumption is that unless we take out the low, we're making higher highs and higher lows. And let's use that half gap for now as resistance, 75, because that's an all-important area, as we know. And let's presume that the low is in already to protect ourselves from just being one-way traders today now and thinking that we got to keep going lower and lower. Let's assume that our primary target has already been hit and done, and that this is a bounce trade, and who knows when and where it will end, but let's be more conservative about the short side right now. If we miss something, we miss it. We've already had a great day. So in terms of the swing, we're looking obviously at this 85s, 82s. That's a primary resistance zone today, and the reason because obviously yesterday's low. So we have to think about that as a primary resistance area too on retests. And first things first. A lot of time left still in the day, and traders are going to start to take profits off the table as we approach the holiday. So sometimes what happens is that causes the last traders to lose. People say, that's it. I've got a good week already. Come on, I'm out of here. Traveling tomorrow or whatever. So I want to be very conservative now about expectancy with big trades. Hope that makes sense. I'm just trying to use common sense. Chipmunk in traffic. See, I got you come up with some good ones. One of Zeke's best. I love. He always says something like this: "Is a this is like a one-legged stool with termites, you know? You do have to laugh, absolutely, because this is such a stressful business. Anybody thinks this is, I realize that we make it look somewhat easy in terms of the targets that we call out and resistance, but they're not all going to work. And truth be told, you got to have a sense of humor to get through the stress of this. And obviously, a towel to dry your hands if you tend to get sweaty palms, or talcum powder. Put your golf glove on to tap on the keys. If you're using real money, come on. In a heartbeat, things could change. And if you make a dumb move, you're going to be in trouble. If you make a dumb move and you find yourself going the wrong way, get out. Just go sideline. You can think clearly. We had said, let's use that 68 as make sure you're paid because we're approaching some resistance. Think about smaller type trades right now. We're going to need some rotations. If you get the garden variety 10 to 12 point type of trade, make sure you get paid. Stops down if you're short. We are looking at the all day range. We said if we hit that middle, make sure that as a long, you understand that we could go higher, but more than likely, you're going to have to give back something to do it. And there's an example of that right here. We're going to switch to the RTH chart. Now, now in this chart, we know that we've come back 3 boxes back into the top of this blue box. And we said that if there was going to be a squeeze, they won't come back usually underneath this breakout, not by much. So jury's still out, and we've got to come back in and come back in towards this middle here. But I'm also suggesting as a short, don't get caught getting too greedy. Originally, we had targets this morning, remember, in that 56.75 area, 55. So make sure that you understand the trade dynamics. If you've got a big boy on your side, this thing will keep moving. But if the big boys start to push long side instead, then these will tend to abort in fairly, small rotations. And they'll try to throw in, a little bit of support from squeeze pivot ideas. There's good news for the shorts, really, that we've been able to come right back under this third time through trade. Normally, a squeeze trade won't do that. Okay, so if you're looking at this chart, we can see the value of this line. We can see we poked up into the next box, right? So we can see on this frame just how we've been able to come about halfway into the next box, and then obviously we're still bleeding back. I'm still thinking that the low is in for the day, but you never know. But that's my feeling. So we want to look at the size of that swing that's happened. And the best way to do that is the RTH chart, because that will start, and it'll show us these bigger levels here, but we also want to know the intraday range and show us where normal pullbacks might get to. So based on this swing, which is a whack-a-mole because we've made a higher high, we know that we've come our 40 back into these 55s, and we know back here 51, 52-ish is going to be the middle support. But got yourself a nice little trade. That's a nice snack. Put that. I mean, come on. You guys that are newer to the business don't understand. When we would go in summers, like a year or so ago, we could go all week long with a trade this size for the whole week. We've been blessed with volatility. Things happen much faster. There were times when when we'd be sitting there in July and in August, and you'd get a whole week when people were on vacation, and the thing wouldn't move more than 15 points for the week. That when we first started trading, that's the way it was, at least for me. You got a 7 or 8 point range for the day, and wow, okay, yeah, that's normal. Got a 10 pointer, was huge. Anybody that is shorted hitting the bounce, we are not thinking about this for new lows. We're thinking about this as a normal type of trade, 40 to 50 back. If you get all the way back here, that's huge to that 46, 45, but we're going to take it one step at a time. For now, all we know is we are profit-taking move from anyone who went long side. And in this 55 to 50 area needs to be respected right now by the shorts. Get below this, good fortune. So if you want to approximate, if you want to think about where's our range, well, let's think about it. Just think about that 50 to 70 range right there. Approximate it. And I'm suggesting to the shorts who have had an extremely good week to think of anything we take now as shorts as gravy. They're still trend trades, but think of them not as powerful of what's already going on. And you get, a couple of points into your pocket, put it there. Don't be afraid to play hit and run now. Let's take a look at one of the moving average charts. And here's our 5-minute chart, which has basically helped to stall us. If you want to fine tune that, you can. Sometimes you can fine tune these a little bit, but that's our base chart. I have found lately the 4-minute chart has been pretty accurate. So I've used that here and there just to fine tune it ahead of the 5. And it's been helpful, certainly. Look where we were yesterday. Remember I said it might take us some time to get south side and get all the averages underneath. Well, it happened a whole lot faster than I anticipated. But you start to read the chart, say, okay, come on, they're taking it south side, not long. It's a great reaction trade. So based on this chart, let's put it back to a 5. Market is stalling and taking profits from this swing. To know the answer to that swing, got to go back to, don't forget we opened up in here 53.75. Keep an eye on that. Got to go back to the RTH chart. Let's take one more look at a Globex. And we can see we're bumping into resistance on the 15s. We want to know the size of this swing, and because that's the high RTH and that's low, the easiest way to do that instead of putting on a swing chart is just go right back to the RTH chart. And we already know by laws of proportion where the 40, 50, 60 is. So let's be conservative and say that this morning has been a great trade extension for the shorts, and the primary trade is up for RTH. And when that happens, then that tells us to be more conservative short side, because we've got some trapped shorts now. We had longs had to pay up, and now we've got some shorts that got trapped. And squeeze pivot, let's say, is right back here near the 48. And obviously before that, you got to get by this guy right here. Well, let's be conservative and say that's our squeeze pivot for now. If that breaks, then we open the door to come back more. And I think we need some time to consolidate. And when you have this type of an arrangement where we start to make whack-a-mole, first thing you want to do is say, well, it doesn't give a free pass to the longs. Let's use logical ideas for these extension ideas. And this was designed to knock out stops. And that's what we've said. That's why you have to take in this type of a market and you try one more short. This is the knockout position traders, and then one more resumption of a short type trade. If it really was going to be a stronger bounce than what we have, and that's a great bounce, it wouldn't come back. It'd keep the squeeze going. It wouldn't come back all this way. So much more neutral now. Ladies and gentlemen, let's give thanks every day that we have an opportunity to take care of ourselves in this business, learn how markets operate, and try to take something out of it. Get your 4 or 5 points per contract a day, and then whatever you can accumulate above and beyond that, lock it away like Zeke says, like a squirrel storing their nuts. Nice trade. Anybody took the short side trade? Nice trade. That's a trend trade. No guarantee it would work. Just the idea of trying to use a little common sense where this type of a run might stall. And it really is about risk and reward. Yeah, it's Zeke, totally understand and agree about being tired after weekend travels. Middle, I've got it 51 and a quarter right here, just being touched. Good fortune below that, shorts.